Have you ever kind of wondered how an entire country can just spend more money than it makes year after year? I mean, if you or I did that, we'd be in big trouble, right? Well, the world's biggest economy has been doing exactly that for decades. So today, we're going to pull back the curtain and solve this massive economic puzzle. How exactly does the United States live on borrowed money?
And that brings us to the central mystery of this whole explainer. How on earth did the United States become the world's biggest debtor nation? To get to the bottom of this, we have to do what any good financial detective would do. We've got to look at the books. Think of it as opening up a country's annual report.
Okay, so first up, a nation's annual report. See, just like a big corporation, a country has something like an income statement. And that top-line number, the one that tells you the total income for the entire country, has a name: GNP. Gross National Product. It sounds complicated, but the idea is actually pretty simple. It's the total annual income of a country. It adds up the value of absolutely everything its people and its companies produce in a year. Doesn't matter if they're producing it at home or somewhere else in the world.
Now, a country's income, its GNP, gets spent in four main ways. You can see that huge slice of the pie is consumption. That's all the stuff you and I buy every day. Then you've got business investment and, of course, government spending. But look, see that tiny little sliver, the current account? That, my friends, is the key to our entire mystery. It's the part of the books that tracks all the money flowing in and out of the country from the rest of the world.
So let's zoom right in on that current account. This is the exact line item, the specific piece of the puzzle that tells us whether a country is living within its means or if it's spending more than it earns.
And what is it really? It couldn't be simpler. The current account balance is just a country's exports minus its imports. It's what we sell to the world minus what we buy from the world. That's it.
And this basic math leads to one of two results. You can have a surplus, which means you're selling more than you're buying. You're a net lender. Money's flowing in, and the nation's overall wealth goes up. Or you can have a deficit. That means you're buying more from the world than you're selling. You're spending more than you're earning. And to make up that difference, well, you've got to borrow. And your net foreign wealth goes down.
And this whole idea is really at the heart of it: saving versus borrowing. See, running a deficit is a huge signal that a country's own savings just aren't enough to pay for all its spending and investment. It has to get that money from somewhere else.
Normally, a country has two main ways to save. It can invest at home, build new factories, new roads, that kind of thing. Or if it has a surplus, it can take that extra cash and invest it in other countries. But with a deficit, the whole thing is flipped on its head. The country isn't saving enough on its own, so it's actually using the savings of other countries to pay for its spending.
Okay, but wait a second. How does this actually work? Like, how does a country physically borrow from another one? Well, that brings us to the global balance sheet. There's this really formal accounting system that tracks every single international transaction to make sure it all adds up perfectly.
It's called the balance of payments, and you can just think of it like double-entry bookkeeping for the entire planet. While the current account tracks goods and services, the financial account tracks assets. We're talking stocks, bonds, cash in a bank. And here's the golden rule. For any country, these accounts must always balance each other out to zero.
Let's make this super real with an example. Say an American buys a $1,000 fax machine from a company in Italy. Okay, that's a negative $1,000 in the US current account, right? An import. But how do they pay for it? The Italian company takes that $1,000 and deposits it into a US bank account. That deposit is now a US asset that the Italian company owns. So that's a positive $1,000 in the US financial account. Negative 1,000, positive 1,000, they cancel out. The key thing to see here, the US just traded a financial asset, a promise, for a physical good it can use today. All right, we now have all the tools in our toolkit. We've got GNP, we understand the current account, and we see how the balance of payments works. It is time. Let's put all of this together and finally solve America's debt mystery.
This timeline, right here, this is where the whole story comes into focus. Go back to 1976. The U.S. was a creditor nation. It had positive net foreign wealth. The world owed it money. But then, look what happens in the early 80s. Things start to change. The U.S. starts running those current account deficits we talked about, year after year. And every single one of those deficits means trading away another little piece of its financial wealth. It's like a slow leak, for decades, until you get to the early 2000s, and bam, the line crosses zero and plunges downward. The U.S. now owes the world more than the world owes it.
And this is the fundamental reason why. It's not some crazy complex formula. For decades, the United States has consistently, year in and year out, bought more stuff from the rest of the world than it has sold to them. And just like in our little fax machine example, to pay for all those extra goods, it has been selling off its financial assets, its stocks, its bonds, its real estate, to everybody else.
And the scale of this, it's just mind-blowing. Let's just take one random year, 2012. In that single year, the gap, the deficit, was $440 billion. That's how much money the U.S. had to borrow from the rest of the world in just 12 months to pay for everything it was importing.
And so, after all that, we have our answer. After decades and decades of these deficits just piling up on top of each other, the end result is crystal clear. The U.S. has the most negative net foreign wealth in the world. And because of that, it is, by definition, the world's largest debtor nation.
So the mystery of how it happened is solved. It's just simple accounting repeated over and over for decades. But solving that puzzle just reveals a much bigger, much deeper one. What does it actually mean for the planet when the world's largest, most powerful economy is also its biggest borrower? I mean, this whole setup allows Americans to consume far more than they produce, but it's all being paid for by the savings of other countries. It's this incredible, precarious balancing act that the entire global economy rests on. And it leaves us all with the biggest question of all: how long can that possibly last?